Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be the Thursday, the 16th of January 2024. So before we jump straight into our Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, let's have a quick recap what has taken shape yesterday in terms of news flow, economic data release, and as well as the intraday performance of the broad-based cross asset classes. Then thereafter, as usual, we'll cover the latest intraday technical outlook for today on the major US dollar pair, the major stock indices, and as well as the two key commodities market, which is gold XAU/USD, followed by the West Texas crude oil. So let us have a quick look what has taken shape yesterday. So yesterday we know that it's CPI day, both from UK and as well as the US. All right. So let's start with the economic calendar first over here. Okay, so as you could see on my screen, on the economic calendar, let's start with the core CPI data from UK first. So for the core CPI data from UK, that means the core inflation rate, excluding oil and energy, actually came down lower than expected. So it came in at 3.2% year on year. Market is expecting 3.4% for the month of December, and it also came down below November print of 3.5%. So if you look at the core inflation rate trend in United Kingdom, so what we could see over here is that it's actually trending downwards over here. So it actually yesterday's 3.2% year-on-year increase for the month of December marks the lowest reading since September. Okay, so if I look at the 5-year trend, so it's clearly inching downwards, showing a series of lower low. That means inflationary pressure in UK has started to kind of a subside, and that potentially could allow Bank of England, which is the central bank of United Kingdom, to actually adopt a much more less restrictive monetary policy that could potentially weaken the sterling dollar in a longer term basis. So we look at yesterday, the sterling dollar actually came down before the release of the US CPI data, bounces back up, and thereafter traded kind of a messy sideways range configuration again. So later I'll touch on more on the intraday technical outlook on the sterling dollar. Then across the Atlantic will be in US. So the US core CPI data, let me take you through the CPI reading first. Okay, so if you look at the inflation rate, that is actually including energy and food, came in within expectation, 2.9%. Markets is expecting 2.9% year on year for December, came in within expectation of 2.9% and slightly above 2.7% in the previous print of November. But if you strip off the volatile item like energy and food prices, the core inflation actually came down below expectations slightly, only 3.2% versus 3.3% what market is expecting. So market is kind of looking more on, the markets are more concerned about the core inflation at this point in time, because you know that core inflation actually strip off energy and food price. But if energy price going to go up higher and higher, potentially it will could some way or another infect the core inflation rate as well in some other form, because we know that all businesses tends to what you call it, put in a way, if oil price keep going higher and higher, in one way or another, the cost of business will tends to rise because of raw materials inputs here and there, and potentially it may slowly feed on through the other inflation basket component that is non-energy as well. But nevertheless, let's look at the core inflation trend. All right. Over here. Let me. Okay, look. Okay, great. So if you look at the core inflation trend on a 5-year basis, right, it's kind of flattish as well. Right, flattish over here. Okay, not really that coming down. It's still flattish. If you look at yesterday's print of 3.2, but market rejoice over here in terms of the risk asset classes. So if you look at the risk asset classes on the Dow Jones Industrial Average, the S&P, the Nasdaq, all of them stage sterling return. The highest top performer is the Nasdaq 100, is up 2.3%, SPX 1.8%, the Dow Jones 1.6%, and also almost 2% by the Russell 2000. So those who follow our daily dose of market insights since Tuesday, we have flipped to a intraday bullish bias on both the Nasdaq 100 and the Dow Jones Industrial Average, which is the Wall Street 30. And yesterday rallied, hit all our initial resistance level that we highlighted in that 2 days intraday technical outlook on the Nasdaq 100 and the US Wall Street 30, representing the Dow Jones Industrial Average. So the market already rallied to our resistance. What will come next? Later, I'll share with you all in the intraday technical outlook on the Nasdaq 100, as well as the US Wall Street 30, which is representing the Dow Jones Industrial Average. Then, given this kind of we call it not so hot CPI data print, core CPI data print from US, but that doesn't actually change the market expectation on the Federal Reserve policy going forward in the month of January and in the entire year, as being expressed by the Fed Funds futures market participants, data being compiled by the CME FedWatch 2. So over at CME FedWatch 2, what you could see on your screen or on my screen over here is the next upcoming FOMC meeting, which is on the 29th of January, the second day of the Lunar Chinese New Year. Still high chance that market is expecting no change. Okay, Federal Reserve to remains the current rate at 4.25% to 4.5%. Right, that's a high chance of 97%. All right, and prior to the release of the CPI data yesterday, almost nothing unchanged at all, despite the fact that the CPI data is only a lesser tad down. All right, in terms of the print. And if you to look at on the aggregated basis, let me expand my screen. Okay, market is also looking at only potentially one interest rate cut next year to come in either the June meeting or the July meeting. Okay, which is a higher chance, right? After March as well, March 19 March, also high chance that market is expecting it to stand pat close to 70% chance. Only 31% chance the market is expecting at least an interest rate cut to come in March. Higher chance for it to come in either June or July. Then thereafter, stand pat all the way. The next potential cut may come in 10th of December this year. But it's like a coin flip, but it's almost 50%, 51% chance. So that's not really that high in terms of odds. So net overall, despite that so-called strong rally in the major US stock indices, coupled with also the US earnings season where banks managed to actually hit above expectation. The earnings report later I'll share with you on the economic calendar when I covered towards the end of the data over here. So despite that, the Fed Funds futures market doesn't really sound so dovish or price dovish. We call it action by the Fed, by only implying potentially still one interest rate cut to come in 2025. All right. So with that particular interesting stance over here, if you look at the FX market, okay, overall the FX market yesterday, yes, it sell off. So after the sell off, right over here, you realize that the dollar starts to bounce back up again at this juncture, at this point in time. Okay, the dollar yen is a bit we call it weird. The dollar is it seems to be moving on its own right now, given the fact that there's a chance that the Bank of Japan might hike interest rate again this month. Right, so that's why the due to what I call the speeches from the various key BOJ officials in the last 2 or 3 days or so. So that's explain why the dollar yen is rather weak at this juncture, the weakest right now, negative 1.5%. From a 5-day rolling performance basis as of now we are speaking. So if you look at the FX market, the dollar index, let me share you the dollar index over here. The dollar index managed to actually pull back and rallied right exactly at the 20-day moving average. Notice this this particular pin bar over here with a long shadow, but after that long shadow, it managed to close up above near the opening session of yesterday's Asia session, because this is the dollar index, so it's like almost like a 24-hour market, not really 24 but 23-hour market. Yeah, so what you could see over here, there's this bullish hammer that's being formed, and this bullish hammer being formed is smack right at the rising 20-day moving average, and as well as the lower boundary of this medium-term ascending channel since the low of the 30th of September. So indicating that some form of dollar bulls managed to support the dollar index yesterday, despite that initial sell-off after that strong US CPI data. I don't like the word use strong here. Slightly better than expect. Slightly less hotter CPI data print from US, but thereafter the market starts to dive deeper into the situation. I believe taking into account of the CME Fed Watch 2 expectation of Federal Reserve policy as well, that causes the dollar index to actually manage to shape a rebound and form a daily bullish hammer right exactly at the 20-day moving average support, as well as the medium-term ascending channel support, indicating some form of what you call it bull footing that is being formed yesterday, bullish footing that's been formed yesterday. All right, so there's no clear signs that this dollar index medium-term uptrend is about to get exhausted. Right, so this after at the end of what happened yesterday. So then what we could see over here is oil prices continue to rally above the $78 per barrel. So without touch on more about the West Texas crude oil technical outlook, gold continues to remain sideways, can't break above that 2,700 psychological level. Despite the we call it the CPI data, because also taking into account that the CME Fed Watch 2 is still indicating no clear signs of continuation of potential dovishness as what the Fed did in 2024, but rather looking at a kind of more of a normalization Fed pivot in 2025. And also yesterday, there's a Federal Reserve official speech, Fed banking. So Fed banking saying that yes, even though CPI data show inflation is headed towards the 2% goal, but he also mentioned that policy should remain restrictive. So he's still also pretty much concerned about a resurgence of potential inflationary pressure coming out from, let's say, Trump's uh, America First policy. All right, so that's actually kind of sum up yesterday's intraday movement of the broad-based cross asset classes, as well as the relevant economic data release and the news flow. So right now, let us now jump straight into the intraday technical outlook on those broad-based cross asset that we cover on a daily basis, starting with the FX market. But before that, let me expand my screen so that you guys could have a better view of the charts. All right, so let's start with the FX market first. All right, so FX market, as usual, we will start with the euro dollar. So euro dollar, still recall that yesterday we do expect a squeeze up. Yes, the squeeze up actually take shape. Over here, squeeze up, hit the first resistance, but can't break above our slightly higher level short-term pivotal resistance before selling off and broke below this minor ascending trend line support level. All right, so with that, for sure, this is a bearish reaction. Ex post US CPI data. So given that the technical elements still remains negative or bearish on the euro dollar, we will still maintain our intraday bearish stance or intraday trend bearish bias, still using the 1.0375 as my short-term pivotal resistance level. Next support level to watch in the near term basis will be at 1.0240. Let me put it writing. 0240. Okay, 1.0240. A breakdown below it, revisit this Monday minor swing low at 1.019. Only an hourly close and a push up above 1.0375. That means that also indicates a bullish breakout of the 20-day moving average, and as well as the minor descending channel resistance that I drew from the high of 6th of December. A clearance with hourly close above 1.0375 invalidates today's intraday trend bearish bias to kickstart a mean reversion rebound potentially looking for the next intermediate resistance zone to come in at 1.0440/1.0460, which also confluence potentially to the downward sloping 50-day moving average. Above it sees a further squeeze up towards 1.0520, which is the minor swing high area of 13th of December and 17th of December. So net overall, given yesterday's negative price reaction right at the 20-day moving average, which is slightly our short-term pivotal resistance level, still use 1.0375 short-term pivotal resistance to maintain our intraday trend bearish bias on the euro dollar. Now, turning our attention will be the sterling dollar. So sterling dollar yesterday, we do have a rather tight short-term pivotal resistance level at 1.2260. Price action actually hit our first support level at 1.2160. That was the release of the UK core CPI data, or the UK CPI data, before it bounces up and squeeze up during the US session, where the release of the less hot US CPI data, then thereafter come maintain that bullish momentum and trade all the way back down below 1.2260 again. So given yesterday's overall price action exposed US CPI data, this is not a bullish sign that indicating that the short-term trend of the sterling dollar has been exhausted. So with this bearish reaction on the sterling dollar that is being formed after the release of a relevant key economic data, so I'll say this is kind of a two-way volatility. I will use a slightly higher pivotal resistance level for today at 1.2325, minor swing high area of 10th of Jan and 9th of Jan, which is slightly above this swing high area exposed US CPI data release at 1.2307. No, yeah, 1.2307. So I'll use a slightly higher level, 1.2325. So 1.2325 will be my short-term pivotal resistance for today on the sterling dollar. Remain that intraday trend bearish bias. First support level to watch for sure will be yesterday's UK CPI data release minus swing low at 1.2160. A breakdown below 1.2160 exposes the next near-term support level at 120.80. Only an hourly close above 1.2325. Short-term pivotal resistance, a breakout above it will invalidate today's intraday trend bearish bias on the sterling dollar to see a mean reversion rebound heading up towards 1.2375, 1.2405, and potentially 1.2480 next, which correspond to the downward sloping 20-day moving average. So net still maintaining that intraday trend bearish bias given yesterday's negative bearish price reaction exposed US CPI data using a slightly higher 1.2325 as my short-term pivotal resistance today for the sterling dollar. All right, now turning our attention will be the Asia Pacific major dollar pair against Asia Pacific currency against the dollar, pardon me, starting with the Aussie dollar. So the Aussie dollar yesterday managed to do a squeeze up, but this squeeze up over here, yesterday we do have a very tight short-term pivotal resistance level at 62.10. It squeezed up above it, but this squeeze up cannot have a clear breakout above 62.25. So this 62.25 is correspond to the medium-term descending trend line from the medium-term descending channel resistance from the high of 30th of September last year. So I'll actually flip to a neutrality stance for today. So turn neutral first between 62.50 and 62 figure level. Only an hourly close back below 62 figure level. That would kind of validate the intraday trend bearish bias again on the Aussie dollar. With next support level coming in at next near-term support level coming in at 0.6165, followed by 6120. All right, so flip over to a neutrality stance for now first on the Aussie dollar, but I do watch the lower neutrality limit at the 62 figure level. So this is something like a potential bearish trigger level that could actually revive the intraday trend bearish bias on the Aussie dollar. Okay, so turning our attention will be the dollar yen. So if you look at the dollar yen on the daily chart first, so on the daily chart, very clearly it can't break above this line over here, which is the 158.35 level. Okay, it can't break above it, and right now is coming to actually test the 50-day moving average, right at this 154.15 level. Okay, this potential level over here, right? Then thereafter will be the 15190 close to this region. You know, it's this one here, 152.50, which is the 200-day moving average. But what you could see over here is that prior to this sell off, the RSI has started to shape that bearish divergence from here. Okay, there's a bearish divergence. Okay, so net overall, right, this dollar yen seems to be facing that downside pressure, also potentially due to the rather lukewarm hawkish speech recently by BOJ officials. So what's in store on the daily intraday basis for today? So this is a daily chart that the next few price movement potentially could take days to form or even weeks to form. So on the intraday basis, on the hourly time frame, last 2 days we, okay, not even last week, even late last week, we flipped to a bearish stance because price action can break above 15835 slash 15880, and it actually read sell off right at all the way itself all the way and hit our support level as well at the 15580 level and continue to inch downwards. So if you look at the current situation right now, the hourly RSI didn't have any bullish divergence, continue to shape a lower low in line with the lower low of the raw price action. Yes, it's oversold, so there could be some signs of rebound taking shape. So this rebound potentially during the European session, it could hit 15666 potentially. So I'll be using 15715 as my short-term pivotal resistance for today. And if you do the Fibo retracement of yesterday's sell-off all the way down to today's Asia session intraday low, that also corresponds to the golden ratio of 61.8%. So potentially there could be a bounce coming into play. So I could potentially fade this bounce using 15715 as my short-term pivotal resistance level, given that the daily technical configuration still remains weak. So as long as any potential bounce didn't surpass above 15715 short-term pivotal resistance level, we will maintain that intraday trend bearish bias on the dollar yen. Next support level to watch will be 15430, which is coming close to the 50-day moving average. Below it sees 15320, which is the minor swing low of 18th of December. Only an hourly close above 15715 and a breakout above it invalidates today's intraday trend bearish bias to potentially see a squeeze up to revisit again 15835 slash 15880. Only a breakout above 15880 potentially could validate the start of a new impulsive upmove sequence, at least in the very short term basis. 15945 next, potentially 16030, which is our major resistance level. So that's for the dollar yen. Still maintaining that intraday bearish bias, but using a tighten key short-term pivotal resistance level for any bounce that can't surpass above it, because potentially there could be a bounce taking shape for today, given that it's already hitting the oversold level at 15715. That's our short-term pivotal resistance level. Now, with that sum up the intraday technical outlook on the FX pair, or I would say on the major dollar FX pair. So let us focus our attention now to the major stock indices, starting with the Hang Seng Index of the Hong Kong 33. So the Hong Kong 33 yesterday broke our Titan short-term pivotal resistance level at 19,350, hit up, test the 20-day moving average, cannot break and shape that bearish reaction again. So this is and as well as the downward sloping descending channel that is in place since 10th of December. So with that, I will turn neutral right now, neutral between 19,580 and 19,120. So unless we start to see an hourly close above 19,580, then that could constitute a potential bullish breakout of this minor descending channel, exposing the next resistance level at 20,140 next. Above it sees 20,520. Right, so turning to a neutrality stance for today on the Hong Kong 33. So neutral between 19,580 and 19,125. Now, flipping over will be the Japan 225, i.e. The Nikkei 225. So Nikkei 225 continues to, we call it, can't face any bullish breakout above the 38,960 short-term pivotal resistance that we have. Yesterday, it tested during the start of today's Asia session, and thereafter it shaped that bearish reaction of it over here, 38,960. So we'll be still using 38,960 as my short-term pivotal resistance level. Maintain that bearish bias. First support level to watch will be this kind of minor range configuration that has taken shape since the low of 13th of December, 13th of January this week at 38,140. Only a breakdown below 38,140 exposes 37,990, followed by 37,700, which is the minor swing low area of 19th of November, 21st of November, and 28th of November. Only an hourly close above 38,960 will invalidate today's intraday bearish bias to see a squeeze up towards the next resistance level at 39,180, followed by 39,460, 39,600. So net in the medium term, it still continues to be trapped in this kind of medium term sideways complex range configuration since 27th of September 2024. Okay, it's inside this sideways range configuration. Still using that for today, still using that 38,960 as my short-term pivotal resistance level to maintain that intraday bearish bias. First support level to watch out for will be 38,140. So that's for the Japan 225. Turning our attention will be the European stock indices, which is the German DAX or the German 30. So German DAX and German 30 squeeze up, broke above our short-term pivotal resistance level and hit exactly the upper limit of the 2,650 level as well. So that's our alternative resistance if the pivotal resistance being taken out. So this level is rather important because if we go to the daily chart, it also represent the upper limit of this major ascending channel that I drew from the low of October 2022 over here. And if I go to the hourly right now, so what I could see is that the hourly RSI has really hit a overbought, extreme overbought level as compared to almost as high as previously that was formed on the 2nd of December this year. All right, this point in time. All right. So with that, I will actually now flip to a neutrality stance instead. So turning neutral for today between the upper limit of that major ascending channel resistance 20,650 slash 20,700, which is also the 0.76164 Fibo extension taken from the low of the 20th of December. Lower limit of the neutrality zone for today will be the former minor swing high of 8th of Jan and former minor swing high of 13th of December, which is the current all-time high area at 20,490. So only an hourly close below 20,490 could validate or reinstate that bearish bias again to see kind of a minor corrective pullback sequence in first step 20,330 followed by 20,190 next, which is correspond to the 20-day moving average, and as well as the minor ascending trend line of the 20th of December. Only hourly close above 20,700 will validate the impulsive up move sequence again towards the next resistance at 20,845 slash 20,905, which is a Fibo extension cluster level as well. All right, so turning into a neutrality stance for today on the German 30, so neutral between 20,650 slash 700, upper limit, lower limit of the neutrality zone 20,490. Now, with that, let us now have a deep dive into the US Wall Street 30, which is the Dow Jones Industrial Average. So the Dow Jones Average rallied as expected. So why we've returned bullish over here when it hit the lower limit of this major support zone. So why is this major support zone so important? Because of this turquoise green line here. So this turquoise green line over here, where it bounced back exactly at the lower limit of this major ascending channel that is in place since 26th of October 2023 low. So go back into the hourly time frame chart. So given that it already hit our resistance level, which is 41,160, 43,160, 43,350 over here, and right now it's coming very close to the 50-day moving average that's acting as a resistance at 43,466. So I'll be using 43,730, a slightly higher level, and also the Fibo retracement of the golden ratio of that previous sell off all the way down to the minor swing low over here. Okay, close to 61.8%. So with that, using this 43,730 as my short-term pivotal resistance level, we will flip to a intraday bearish bias for today on the US Wall Street 30. US Wall Street 30 first support level to watch will be at 42,660, which close to the 20-day moving average acting as a support level as well. Only a breakdown below 42,220, potentially revisit Wednesday minus swing, Tuesday minus swing low area at 42,200. However, a push up and hourly close above 43,730 will invalidate today's intraday bearish bias on the US Wall Street 30 to see a further squeeze up or recovery towards the next intermediate resistance level at 44,195 congestion area of 10th of December and 12th of December, as well as this former minor ascending channel, not support, now turns into a pullback resistance, also confluencing at 44,195. So net overall, I'll be using 43,730 as my short-term pivotal resistance on the US Wall Street 30, flip to a intraday bearish bias for today, given yesterday's steep push up over here. Now, turning our attention will be the next will be the Nasdaq 100. So the Nasdaq 100 also did a squeeze up as well, hit our resistance level, and now testing that 20-day moving average over here. Hourly RSI starts to shape a bearish divergence, a lower low, all right, over here, whilst price action shape a higher low. You can see a higher I repeat again, price action shape a higher high, but the hourly RSI shape a lower high. Okay, this high, lower high over here. So indicating upside momentum yesterday seems to be dissipated despite this strong push up. After that strong push up, it's try to trade rather a small candlestick pattern. All right, a bit of doji like hesitation right exactly at the 20-day moving average and slightly above the upper limit of this minor descending channel that is still in place since the high of 18th of December. So I'll be using 21,370 as my short-term pivotal resistance level for today. And if you were to do the Fibonacci retracement of the last push down from Tuesday all the way down to this Monday, that correspond closely to the golden, no, the 76.4% as well. So with that, I'll be using 21,370 short-term pivotal resistance level on the Nasdaq 100, flip back to a intraday bearish bias. First support level to watch 20,990. Only a breakdown below 20,990 exposes a further potential slide to revisit this Tuesday minus swing low area at 20,700. However, if we start to see an hourly close and a breakout above 21,370, that will invalidate today's intraday bearish bias on the Nasdaq 100 to see a further potential recovery, at least in the first step. Revisiting 21,730, that is the minor swing high area of 6th of Jan. Above it, potentially sees the current all-time high area back again at 23,130, 22,130, pardon me, 22,160. So net overall for today, I'll be using 21,370 as my short-term pivotal resistance level, and we will flip back to a intraday bearish bias on the Nasdaq 100. Right, so that sum up the intraday technical outlook on the major stock indices. So now turning our attention or focus now back will be the commodities market, starting with gold XAU/USD. So we know that gold XAU/USD can't have a proper breakout above the 2,700 psychological level. So with that, yesterday we do have a tight 2,690 as my short-term pivotal resistance, looking for it to revisit 2,650 followed by 2,640, but however that didn't materialize. It started to squeeze up all the way up towards 2,700 psychological level. So with that, I'll be flipping to a neutrality stance for today. So neutral between 2,704 upper limit and lower limit will be 2,677. So only a breakdown below 2,677 will potentially see a kind of a downward drift back towards the lower limit of this minor ascending triangle range configuration that is still in play since the low of 14th of November. So below 2,677 exposes 2,650 followed by 2,640. However, if we start to see a bullish breakout above 2,705, then potentially it may revisit the upper limit of this minor ascending triangle range configuration with the key minor resistance zone at 2,716/2,728. Right, this minor swing high over here. Okay, this part over here. All right, so this is still a symmetrical ascending triangle range configuration on gold XAU/USD. All right, so that's for gold. What's next for the West Texas crude oil? So the West Texas crude oil continues to have a very strong bullish follow through after intraday retest on the bullish breakout of that former major descending range configuration that previously kept the high since September 2023. On Monday, it staged that bullish breakout. Yesterday, it managed to do an intraday pullback, and towards the end of the US session, it managed to form a bullish candlestick. So this is a very indication of a very strong momentum play coming into the West Texas crude oil market in terms of a technical analysis perspective, pardon me. So yesterday we do have a 79.10 looking for a more substantial pullback below 77.56 to go down below 76.70, but unfortunately it just hit our first support level at 77.56 again before staging that rebound and broke above 79.10. That was our short-term pivotal resistance. So with that, this short-term pivotal resistance now turns into a short-term pivotal support. So any potential dip, as long as managed to hold above 79.10, we will flip to a intraday bullish bias on West Texas oil. Next resistance level to watch 80.90, a breakout above it sees 83.80 slash 83.30 slash 83.80. If we go, what's this level over here? This minor swing high area of 12th of July and 18th of July last year. Okay, so only a hourly close and a breakdown below 79.10 level. Potentially we'll start to see, we'll revisit the 77.56 level slash 76.70, which is the clear key pullback line of that former major descending triangle range configuration now turns into a pullback support. So i.e. we'll be using 79.10 as my short-term pivotal support level for today. In any potential dips, we'll flip to a intraday bullish bias on West Texas oil, given that the daily time frame technical elements has started to turn rather bullish over here. So with that, that sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's take a look at the economic calendar to see what are the data to look out for today. So today will be Thursday. So Thursday over here will be a rather quiet session as well. On Thursday, if you go all the way down to the European market, so it will be the, okay, because this inflation should be the finalized figure for Germany, it should be more or less the same as the preliminary one, so not much of a big surprise. So the big surprise will the market will be focusing, I would say, i.e. on UK data. So UK, you will start to have the monthly GDP data for the month of November out at 3 p.m. Singapore time today. And thereafter, we also have the ECB monetary policy minutes for the previous meeting in December out at 8:30 p.m. Then in US, we do have the retail sales figure out at 9:30 p.m., which is a tier 1 economic data, as well as we know that close to 3/4 of US economic growth is being driven by the services activities, and retail sales is part of the subset of these services activities. So that is at 9:30 p.m. Singapore time. Then thereafter will be a rather quiet session. Yeah, rather quiet session at this point, at the point in time, and except that only before the start of tomorrow's daily dose, we have tier 1 China data out 9:30 a.m. The housing price index, then followed by 10 a.m. Q4 GDP data will be out as well, followed by industrial production and retail sales, and that will be all out at 10 a.m. Singapore time tomorrow. So a rather interesting, potentially volatile session as well in tomorrow Asia session due to the release of this key tier 1 China data. So before we go, let's look at the calendar on the earnings front for the US earnings season, which is has kick-started yesterday. So we know that yesterday's is a slew of banking stocks. JP Morgan, Wells Fargo, Goldman, BlackRock will be a key financial institution instead of a banking stock, followed by Citigroup. So all of them actually managed to beat expectation. Right, all them and big expectation. So for today, it will have another key stock to look out for will be United Health for US. So United Health is in fact the the top 2 key component stocks of the Dow Jones Industrial Average. Bank of America will be releasing the result out as well, and Morgan Stanley. And do not forget, we have the all important part of this AI team play as well, because AI team play also have a significant influence on the Nasdaq 100, and Taiwan Semiconductor is also part of this team play, as we do know that Taiwan Semiconductor is the biggest chip foundry in the world. So that result could also potentially impact the Nasdaq 100 indirectly as well. So Taiwan TSMC also released its result for today, 16th of January. So with that, that sum up today's daily insights of market news. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.